Hi, I'm Evaldo Albuquerque, and today I want to talk to you about the Chinese stock market. I want to show you how you can use the Chinese stock market to help you decide if you should buy or short commodity currencies. So we are looking at a daily chart of the ETF iShares FTSE China 25 Index Fund. The ticker for this ETF is FXI. It's basically a basket of the 25 largest Chinese companies. I like to use this ETF to get a sense of how well the Chinese market is doing. If the Chinese stock market is doing well, you'd expect commodity currencies to rally against the dollar. And if the Chinese market is not well, if it's declining, you'd expect the dollar to rally against commodity currencies. And that's how I use this ETF FXI. Notice that in recent weeks the FXI had a major breakout to the downside, and that was an indication that commodity currencies would fall against the dollar, and that's exactly what happened. But as of today, May 29, you can see that FXI is now rebounding and is up almost 4% on the day. So this could be the beginning of a short-term rally, and if that's the case, we could see a short-term correction in commodity currencies. Notice that this is the same level where FXI rebounded last year, so this is a key support area. And also, if you look at the bottom, I have the RSI momentum indicator, and basically this indicator, when it's trading below 30, indicates the asset's oversold. So there is a higher risk of a correction. Notice that the FXI is now rallying, coming from these oversold levels. And more important, you can see what's called a positive divergency in this chart. Let me zoom in and I'll show you that. You can see that FXI made a new low, but the RSI did not. You have a higher low in the RSI and a lower low in the FXI. And this is what's called positive divergency, and it indicates this downtrend is losing momentum, and this could be the beginning of a short-term rally. If that's the case, you should be buying commodity currencies against the dollar. But even if we get a rally, I don't expect this ETF to rally above 36. This would be a major resistance area. But still, you could place short-term trades in the Forex market by buying commodity currencies such as the Aussie, the South African Rand, and the Mexican Peso, just to bet on this short-term correction in the Chinese stock market. That's all I have for today, and thanks for watching.